Good morning. My name is Scott Redler, Chief Strategic Officer at T3Live.com.
And I'm Brittany Umar, and together we bring you Morning Call. So you're seeing mixed markets around the world after Europe has 5 down days and the ECB left rates unchanged, which was expected. The Nikkei has another down day, totaling 3.7% off those 6-year highs, while Asia is mixed. So now everybody's trying to figure out what's next. Scott, do you think that the trend that we've been seeing remains intact, or is it starting to weaken?
Well, the action's showing you that entries and exits matter, as well as time frame analysis. And right now, you've had this 4 or 5 day pull-in around the world. But if you look at the trends that we followed for the majority of 2013, things are still intact. Let's go through quickly. Right here we go on the FXI first. FXI happens to relate to large cap China. Here's your double bottom over the summer when things changed. Higher low, higher low. Here's when we took out that downtrend, got some follow through. Then we corrected a bit to retest that breakout. Here is your big gap and go. And now we're still holding sideways, letting the 21-day catch up. So if this trend, to me, were to stay intact, you would want to see this area hold. You'd want to see 39 hold. Otherwise, you might come down a little bit further. If you look at the Japan or the EWJ, it had a heck of a move to start the year. Look at the size of this trend. We're higher highs the entire way, fast and furious, until this red dog reversal. Then you had a corrective phase of about 20% until you got another one. Then from here, you had a low, a higher low, a higher low, another higher low. So you haven't had as much momentum as people would like, but we're still trending in that direction to the upside. So with that being said, Japan is acting just fine. And if you look to buy dips, this is one of your spots. And then I know the pond got a bit full as everyone got very, very positive on all of Europe just when it had its pullback. So if you didn't chase up here after this enormous move, maybe buying into the trend line here, which held at first point, works. So at this point, if you're navigating the market, you got to watch these trends. You can't chase things. If you're in it for the longer term, these things look very much intact.
Well, in terms of our markets, we were able to minimize losses yesterday, but we did have another down day. And the trend has been that 3 or 4 down days has been viable in our markets. So do you think that'll be the case again?
We'll know either today or tomorrow. I do like the way some leaders acted. Some of them were a bit heavier. But if you look at the 2 different trends here, the one that started in November, where if you go back here, so if you're at the beach, stay at the beach. If you're following this trend, this is the red dog reversal that started it. Here you had a higher low, another higher low, and then here we are now. So some are scared. Look at the size of this move we've had in 2013 on top of what was a bigger move the year before, or the same type of move. So within that move, you've had these navigation points. You had this outside day in May that gave you about a 5% correction. Then you had this head and shoulders top that gave you about a 3.5% correction. Then you had this breakout failure where it pushed above, came back below, gave you another corrective activity. And since this one, it's been pretty much straight up holding the 21-day. So with that said, if you're following this trend, the one that started here on this day, which happened to be October 9th, you want to make sure it holds here. So right there, that is 1779. If you put a little bit of risk back on yesterday, use this as your low to trade against. And if we start to get better, we're going to have to take out about 1800 and reclaim that. But for right now, here's your point of reference. I would be very tactical. We're in December. Most of the bigger money was probably made this year. So if you're trading for P&L and cash flow, just know what you're looking at, because I think macro investors don't care if we're up another 2% or down 2% this year. It's more for traders who are looking for P&L.
Right. Well, let's turn the spotlight then to social media stocks, because Facebook especially showed real relative strength yesterday. It was one of the first stocks to go positive and managed to log in a 4% gain. So what do you expect there today?
Well, we came into Facebook yesterday saying, okay, stocks corrected from 54 all the way down to 44. Broke its little downtrend, acting better. Can it get above it? And there was early morning strength well before people started talking about its addition to the S&P 500. So if you look at the chart here, you will see that first a few things. If you remember on this day, this was your red dog reversal, the time that you said, okay, let me cover some shorts and see if we start acting better. From there, you had a quick move up, sideways action. So yesterday, I think a bunch of us were long going into this. Here was your add above 47.54, and you had a clean move on some volume. Some are claiming the last half an hour move was because people thought it would get added to the S&P 500, and it wasn't. So it's down pre-market. I would say if this stock is going to be good and not, come back into the base and be choppy, it should hold at least 47.50. So if you did sell some on the close and held some, maybe, buy some back for a red to green type of situation in the first 30 minutes to 60 minutes. I think the stock should take that in stride.
Well, there was participation within the group from other stocks like Twitter, which managed to log in a 5.6% gain. So obviously a trickier one as it's a new issue and hard to chase after a big move.
Yeah, and this one, we started talking about it yesterday, and on the VTF, I went long the day before. We put 42 on it on the morning note as an area for potential more upside. You look at the chart, stock ever since becoming public, these 2 days, were in a void, gave you a little red dog reversal, gave you a move back up that kind of failed. Here it tried to break down and couldn't, came back up, so this looked a little interesting. So right here across this mini trend line and squeezed up because everyone in the world's been talking about going down to mid-30s or lower. So you had a little squeeze, and with that being said, it closed pretty well. It's probably down a little bit. I'd like to see Twitter hold 43. Or 42.75. If it holds right around here, I will stay with some of mine. And then if it goes sideways again, maybe you get another buy through this little area, which was the prior high. So at this point, let's see how much commitment it has to yesterday's move. If it gives back the entire day, it'll probably be frustrating.
Yelp as well enjoyed a rally of about 4.6%. What level would you say that this needs to hold, or you would like it to hold at least?
Well, this one had that rounding top and it was wedging, okay, and it wound up breaking to the upside with the social media strength. So you look here, you look at the chart, this was the big support that it broke below, and then it wedged. It wasn't sure if it wanted to have downside follow through. So I think I drew this little line yesterday. I apologize for I'll take it out. So it got above this little area and it closed near the high. So it's probably down a little bit with Facebook. So today, if you didn't take it home long, maybe look for a negative to positive move through the prior day high for continuation. And if it's any good, it should probably hold somewhere around this 61.70. So with that being said, nice trade yesterday. I'm not sure how much continuation it will have, but in December, when we're looking for things to do, that was something to do.
What about LinkedIn? What can we do here?
LinkedIn actually looks a little bit like Yelp, before any type of move. So if you look here at LinkedIn, you will see that, yes, you've had some corrective activity since earnings, and now it's getting tighter. So with that being said, this didn't tip its hand yesterday, but if social media goes green today, I think you could see a trade here in LinkedIn above this 222-ish, for something maybe to retest these moving averages. Overall, it's been a heck of a move. You look at the weekly chart, it's still trying to work it off. This cup and handle pattern that we've identified way back when in 2012 ignited really hard to start 2013. So it's still just correcting, and it's in a wedge phase here. So at some point, it's either going to break to the downside and perhaps test this 192, or the bid in the market stays intact. Perhaps it gets above 225 or 222 and gets back up to 240.
All right, coming up, we're going to go in the trenches with the banks. But first, a quick commercial break. We'll be right back.
I'm Mark Sperling, Director of Trading with T3 Trading Group and contributor to T3 Live. Do you trade on your own, but you wish you enjoyed the benefits of a large trading floor? With the T3 Live virtual trading floor, we deliver that experience to you on your computer. On the VTF, you can follow the long and short positions of experienced professional traders like myself, Scott Redler, and others, and listen to our live radio stations as we navigate the markets. In addition, you get the added value of a large community of sophisticated and like-minded traders. In my opinion, joining the room will be the best trading decision you will ever make. I would like to invite you to begin your membership with a 7-day free trial. To get started, visit t3live.com and click on the Virtual Trading Floor tab. Have a great day, and I look forward to seeing you in the VTF.
We're back and going in the trenches with the banks, which have had a nice move over the past month, but have pulled in a little bit ahead of tomorrow's jobs report. Scott, first, do you think traders will have a real either today?
Yeah, because this was the group that ignited a month ago when we got our first really strong jobs report. So since then, you had a nice move. We pulled back a little bit, so I think it's a spot that traders are going to look to try and participate with. So, tomorrow we have the numbers. If they happen to be strong again, let's see how the banks react this time. You look here at the chart, you will see this was when you had this, bull type flag consolidation, and it ignited. It held, and this was a nice move for the past month. And since then, came back, retested this prior breakout, and held. So at this point, the 21-day is your friend. This is the moving average that's held for the majority of this move since this red dog reversal back here on October 9th. So with that being said, if you trade actively for short-term cash flow, that's the spot to be long verse right here. If you're in it from way back when, over the past year, 2 years, you really don't have that much to worry about coming into this little area unless you want to put a high-level stop.
Well, let's see what we can do with some of these names then. Let's talk Citigroup, which opened lower yesterday but filled the opening gap to the upside to erase all of its overnight losses. What can we do with Citigroup?
Citigroup probably needs time. It got downgraded yesterday, so that was the bank that took the longest to go positive. I tried catching a trade here, which we caught a decent-sized trade, a week and a half ago, but then it just pretty much failed at highs. So the question is, kind of regrouping, can it go? Okay, this is when we started to refocus on Citigroup, and it gave you a really nice 3-day move through highs. So with that being said, probably sold a little bit there, and then I got stopped out when it closed below this area because I trade actively and I could approach it. So this was, I think, the day I got stopped out right here. From there, another down day, then you had this down open, and I didn't go back to it. I went with actually Goldman and Bank, which we'll get to. But overall, it came in, held this area, went green. I don't expect it to be a barn burner real quickly, but with time, it could work its way back. So with that being said, if you got stopped out around 53 and you entered yesterday into the 21-day, nice, manageability of your positions. If you were still in it and you held it, I think now this is your line in the sand. This stock, if it's any good, should not get back below this price here, in the next week or so, or the next few sessions or so, which is about 51-ish.
Well, Bank of America fared a little bit better, reclaimed its 8-day EMA with almost a 0.6% gain yesterday.
And this one I held through, because I had, at the same time, I think I had Bank of America, Citi, and Goldman. I'm like, what, Citi was the last to come up, the laggard type, so I got out of that. But I stayed with this one, but just tried to add into levels here. So if you look at Bank of America, this is when this ignited back, on that jobs report, and it gave you a tremendous move through prior highs. This one, wasn't the laggard, it was the leader, so you always want to go back to the leaders. So with that being said, here's where you had a small faulty action. When I remember this hurt a little bit, I added at that, 15.95, and it failed, so got out of some size, held some, and now, it held right here. So with that being said, it's above the 21-day. You saw the Citigroup touch it, so that's showing strong, strength here and relative strength. If you want to put 1536, or just say like 1525 to 1536 as your line in the sand, if you're an active trader, fine. If you're an overall macro investor and you've been in this thing, for the past year or so, I still think that you don't need to touch it, that at some point coming into 2014, you could see a $22 to $24 stock, which is a nice move from here.
Well, speaking of going back to the leaders, what about JP Morgan, which had about the same percentage gain yesterday as Bank of America, almost 0.6%?
Yeah, it sounds like they're getting out of the news a little bit more. I think somebody came in and upgraded them today. I'm not sure who. So with that said, if you flip some gears away from Citibank to JP Morgan, you might have a cleaner path, so to speak. So if you look here at the chart, this too held above the 21-day. This also broke above the prior high that Citi had a little bit of trouble with, and it's wedging again. So with that being said, put this on your radar. With that, it held above the 21-day. It'll have to start getting back above 58 for a potential move, into the 60s. And I do think in 2014, this thing could see, 62 plus.
And Goldman Sachs, not as big of a gain as JP Morgan and Bank of America, but had almost a 0.4% gain and got back above its 8-day as well.
Right, this one took the longest to get to the highs, but this didn't come back down to the 21-day. So it's like giving you some divergences within it. So at this point, I'm still long some, but I'm not going to add to it until I see something really give me a signal. And if you look here at Goldman, it's been a little tough to deal with. These were those prior highs. It flashed through it and then couldn't hold above it. But look where it is. It's still above the 8-day, still above the 21-day. You have, just say this was the low. You have a higher low, and you still have this trend here that's intact. So if you're long Goldman short term, I still think it looks okay. Right around this 165 should be your stop if you approach it that way.
Okay, let's do some quick hits here. We have to talk Apple signed officially the deal, the iPhone deal with China Mobile. At last check, the stock was up about $10. What do you do here?
Well, I am long overnight, and coming into here, this point in call, I sold some, which is what I always do. If I have a stock that's up a lot pre-market, I sell some, and then I check the complexion of it as the trading day unfolds. So the question is, will this be a gap and go and be up 20, 25, or do they price it in because it's had a big move over the past month or two? So if you look at the chart here of Apple, you will see this is when I got really excited about Apple. 2 quarters ago when it gapped up and held, gave you a quick move, gave you a retest. This was another nice buy around 493, and then this was your thankful Thanksgiving move into where it is now. So with that being said, it's gapping up. You have a gap that can get filled here, which is right around 585, which I think at some point it gets to. You take a closer look there, though, it's been a nice move. So with that being said, here's the next resistance. Some are saying, next year this thing could be 620 to 640, which I think it could be. Okay, I think right around here I talked about the end of year move 560, 580, so it's already there. So again, I sold half, and then I'm going to see if how much of this gap stays intact. If all of a sudden it opens up 10 and closes negative, I'll be out of it, and then it'll need some time. If it holds up 7 or 8 and closes up 15, I'll stay long as it's shown commitment to that news.
Gotcha. Okay, how about Google, which continued to base above its 8-day, still needs some time before it's ready to make a new high?
This is looking good. It's not that powerful, but there
Right.
are pockets when you can make money, and at this point it looks pretty set up again. You look here at the chart, and you'll see that it's been riding this 8-day moving average, gave you a nice trade right here, a nice trade right there. If you bought the dip here, congratulations. Next level for it to get momentum would have to be above this 1,068.
And just a quick check-in on Tesla, back on the radar after that big move. What do we do here?
Tesla was, like Tuesday was Apple and Tesla day. Yesterday, Tesla took the day off,
Right.
but still held in there relatively well. If you look here at Tesla, you'll see that that is still Google. You want to see commitment to this wide range bar. So as of right now, it kind of gave back a third, which is still fine. You would have hoped that it would have went green, which it didn't. So at this point, I will look at it. You have an action area 137. If it happens to go below it, comes back above it, maybe that's your way to re-enter it. If it holds above it, maybe buy verse it. So little sideways action above this 137 would be good. I guess you could say, the 21-day, which is, could you see that? Around 136 would be the end all. And I also, just to throw in there real quickly, Solar City, which is a solar name, that's a Musk name, just to have in there. It still looks okay. It's got to hold above 50 in order for it to continue to go.
And lastly, Baidu was able to find support at its 8-day and close on highs. Will this one be on your radar today?
Yes, so this one I'm long a little bit, and I'm hoping that you can get a clean breakout above 170. So if we do get strength in the market, this is something that has a nice setup. If you look here at the chart, you will see that here's at 170. It's hovering there. Couldn't do it 2 days ago. Maybe now it gets above this and stretches into highs. But again, it's not the easiest environment to find momentum because the market's not sure what the next step is. But if we're going to get some strength, I would think that this could have a clean breakout above this 170.43.
All right, well, we'll also have jobless claims today. We have third quarter GDP, and of course, we have non-farm payrolls tomorrow. What will we be focusing on today?
I just want to see how we react. If we have good news, the jobs number a month ago, good news was good news.
Right.
Lately, good news has been bad news, and at some point, I think good news will be good news again. I know that about a week ago, our oscillators were like plus 45-ish, which is overbought. So with that being said, we just pulled in below negative, so we're not overbought, we're not oversold, we're kind of neutral. You have decent action in some of the leaders. You've had a nice pullback in some of the sectors, like the banks to the 21-day. Right now everything looks like somewhat in stride, but that could change. Risk happens fast. So know your time frame, know your commitment, and I think as long as we hold above yesterday's low, I think that trader's going to try and have a glass half full.
We like a glass half full. All right, happy trading, everybody. Have a great day.